Government data shows inflation hitting a 40-year high this month, and they've stopped saying this won't be a problem. As the prices for necessities like food, housing, and gasoline are surging, the average person is left wondering what can they do about it. Today, we're going to look at investing in cryptocurrency as part of a strategy to protect your money during times of high inflation. Let's get into it. Today's video is the second in our series on investing during high inflation. In the last video, we took a look at the role precious metals like gold and silver can play in a portfolio to protect you against high levels of inflation. And today we're going to look at cryptocurrency, specifically Bitcoin, and how that can fit in with this strategy as well. The idea of cryptocurrency as an inflation hedge isn't just my idea. There are some captains of industry that are worried about high inflation and see crypto as part of a solution to that problem. The billionaire investor Paul Tudor Jones has recently said that he sees crypto as a better hedge than gold right now. Jones is worried that rising inflation will be a threat to U.S. financial markets. Other big names in crypto like Jack Dorsey have gone as far as saying that hyperinflation is on the way. Dorsey was CEO of both Twitter and financial services company Square, now called Block, but left Twitter recently to focus on crypto work in the financial services industry. Square owns some Bitcoin itself and is looking to get into Bitcoin mining as well. Besides Jones and Dorsey, there are others that see cryptocurrency as a viable hedge against inflation. For those new to the topic of cryptocurrency, you may be asking, what is it? Ultimately, it's what the name implies. It's a currency. You just can't physically touch it. It's digital. Like other currencies, it's a medium of exchange, and like the dollar and gold and silver before it. What really matters is the value that everyone agrees on that it has and what you can get for it. It's the new kid on the block. Bitcoin, the most popular cryptocurrency, was invented in 2008 and began use in 2009, so there's not enough transaction history to find a good value for it. This contributes significantly to its volatility. No one really knows what it's worth. With something like gold, where you have literally thousands of years of information on the value it has held, you have a lot less volatility. Now, what makes it different is the blockchain technology involved with it. I'm not an expert on the technology side of cryptocurrency, so if you want to know more about that, a YouTube search will likely give you more information than you wanted. Basically, the blockchain technology provides a level of security for transactions and is intended to prevent fraudulent transactions and maintain a fixed supply of the currency. There is a digital mining that takes place to bring more crypto into the supply, but this is part of the system, and outside of it, there's no way to produce more things like Bitcoin. So, that's what crypto is. Why should you care about it? At this time, I'm going to drop my usual disclaimer so I don't open myself up to legal liability. I am not a certified financial advisor. This video is not financial advice, and you are responsible for your own financial decisions. Now, when it comes to investing, there are few people that would say that you shouldn't diversify your assets. You don't want to put all your eggs in one basket. So when we're putting together a portfolio to protect us against high inflation, we want to pursue a diversification strategy here as well. This helps to mitigate our exposure to risk in any one asset. Cryptocurrency, and I'm thinking primarily of the more popular ones like Bitcoin and Ethereum, have some strong advantages. Their supply is fixed. You can't just create more. This is a trait it shares with precious metals like gold and silver. And like those metals, you can mine more, digitally in the case of crypto, but over time you're going to get less and less from mining. This fixed supply can provide long-term stability for value. And it's decentralized. No one controls it. This is also similar to gold and silver. But crypto has another advantage as well. It is highly liquid. You can go online and buy or sell it 24 hours a day. We're also seeing the development of crypto wallets and increasing acceptance of its use for directly purchasing goods and services without converting it to a currency like the US dollar first. You don't get this with physical precious metals. Try bringing a bar of gold to buy your next car. The seller might not even know what to do with it. Compared to precious metals and government-issued fiat currencies, crypto has the best of both worlds. It can be a store of value like gold due to its fixed supply, and it is becoming a liquid asset like the US dollar. Now for the disadvantages. There is a significant amount of risk for cryptocurrencies, and we covered this more depth in a video we put out earlier in the year. The biggest risk is that the practical value of it could go to zero if it is banned, like China has already done. Basically, if you can't use it for anything, it doesn't have any value. It doesn't look like that will happen here in the US at this time, but all it would take is a new law and it could get banned overnight. If anyone thinks the US government wouldn't allow people to possess a form of money, just look at what they did to gold in the 1930s. Very few things are without risk in this world. It is also highly volatile. Just look at this chart over the last 2 years. It went from a low of around $5,000 back in March of 2020 all the way to a high of nearly $70,000 in November 2021. And along the way there was a plunge of 53%, followed by a surge of 77%, another drop of 23%, a surge of 66%, and finally a drop of 32%, which brings us to where we are today, around $50,000 per coin. And a lot of these big swings had more to do with what Elon Musk or Janet Yellen was saying than anything else. Needless to say, investing in cryptocurrency is not for the faint of heart. If you're going to use it as a hedge against inflation, it is ideally held for the long term. And then you have to ask yourself, can you handle the emotional roller coaster of holding such a volatile asset? In my opinion, that should heavily factor into your decision. Another disadvantage is that it is dependent on the availability of electricity and a computer network. So if you have a prolonged power or internet outage, you may find your digital currency a little hard to use. Now you may think this shouldn't be a problem in our modern time, but recent events have shown us differently. We have severe cold weather in places like Texas that practically took down their entire electrical grid, and we have severe hot and dry weather in places like California where the utility companies are intentionally powering down some areas, either due to heavy use of air conditioning units that require a lot of electricity or preventing wildfires. There's also the risk of cyber attack or even physical attack by those who don't really seem to care if they bring down our grid and the chaos that it would cause. But despite the disadvantages, I see the advantages of cryptocurrency are strong enough that it makes sense to me to have some in my portfolio as a hedge against inflation. I made the decision to hold a small percentage of my overall assets in Bitcoin and Ethereum and a little bit of Dogecoin, but that last one honestly was more for entertainment value than anything else. For you, you need to weigh the risk for yourself to determine if that is right for you. Everyone has a different tolerance for risk, and if you're stressed out on a daily basis because of the risk in your investments, the potential return might not be worth it if your overall quality of life is down because of the stress. If you want to know more about how risk and return are related, be sure to check out our classroom video we did on that topic as well. If you found this episode useful, please give it a thumbs up to support the channel and help boost us in that YouTube algorithm so more people can see content like this. And if you haven't already, I hope you'll consider subscribing. We try to do an inflation outlook video once a month to help you know what the outlook is, how long it can last, and what's coming over the horizon. So make sure to hit that notification bell down below so you know right away when our next video on investing and inflation comes out. Thanks for stopping by. I'll see you in the next video.